Hello and welcome to the market update here for Tuesday, April the 11th. As always, if you have any questions during the week or any questions that I don't get to here in the live class, make sure you send those to Jerry at TradersPro.com. I'll be happy to answer those for you. Last Thursday we were talking about obviously going into the holiday on Friday jobs report. Figured that could, start maybe moving the market. It is something the Fed looks at. But I had warned you that it might be that we get that jobs report and then the market still waits for this week's CPI report, which is tomorrow on Wednesday. It comes out before the market opens. At some point in time, this is what's driving me crazy with looking forward to the next report, the next Fed meeting, the next Fed minutes. Is that it's just choppy, and so my advice would be that if the market doesn't react to the CPI report, then just expect that we're going to see a lot of just choppiness back and forth for a while, because it just means that the market isn't finding what it wants to hear to make a decision. The sellers aren't hearing what they want to hear to start selling. The buyers aren't hearing what they want to hear to start buying. Now, obviously, there's still buying and selling going on, but as you can see, you look at the chart, it's just been back and forth. And this is probably the most back and forth that I have seen. Probably since going back to some of my earlier, well, even in some of my earlier years, I would say that there was a little bit of choppiness. I don't know. It's been a long time. I mean, and I don't remember it being this bad over this long period of time. Now, obviously, you get choppy periods in the market. It's part of trading, but usually they don't last this long. And that gets a little frustrating because the money is easier to make when markets are moving. I always say that, and in particular with a longer term type approach, bull markets are where you're going to make easier money. Now, it doesn't mean we still can't make money, but it's definitely frustrating, and it's out of our control. We can't control it. So, if the market wants to wait until the next report that comes out or meeting that happens, then so be it. But the way things are lining up, though, I keep showing you this, and we'll look at it again today. It's if I were to say what direction is the next big move going to be, it's still lining up to the downside, and more likely to be to the downside. And I'll show you that here in just a second as we look at this stuff. Direction alerts again. We're still in a bear market. We have been moving towards kind of that bull market territory. You can see where the line is right here. It's getting pretty close. However, like I said, the way some of the other indicators are lining up, it looks like what'll probably happen is we'll get close, and then it'll come back down, and then eventually work its way back. I mean, we are closer to a bull market than the end of the bear market than the beginning of the bear market. But like I said, I still think there needs to be that flush out move. And I'll tell you what you really want to focus on, because I don't know. I just got a bachelor's degree in business in college. But I'm always amazed at some of these people that are getting on TV that have master's degrees or doctorate degrees, and they keep talking about how the consumer is fine and the consumer is strong, and they keep focusing on the recession side of the argument, and that's not the problem right now. The problem is the inflation part of the argument. So if you keep talking about the consumer being strong, that means the inflation isn't solved yet. I keep saying this, that you've got to have a consumer that's afraid to spend. It has to be something that's emotional that changes the behavior. It has to be something that's painful enough to change the behavior. And I'm telling you, if the if if the Fed stops hiking and they start lowering and the economy starts taking off again, the consumer, which never got shaken completely in this whole process yet, is going to start spending again, and the inflation is going to kick right back up. And like I keep saying, now you've got to start all over again, and you're pushing this thing out another 3 years or so, 2 years and maybe 3 years. So, I would look at when you start to see consumer spending numbers really start coming down dramatically, then I think that's a sign that finally inflation is, well, it means the economy is, it means that the recession risk is going to be much higher. It means we're probably in a recession at that point. But that is when you're going to be dealing with the inflation problem, is when that consumer confidence, consumer spending really start declining. And when you hear people start talking not about the strength of the consumer, but the consumer now is afraid to spend or what have you. And again, we haven't dealt with this since the 70s, and I was probably a 10-year-old kid in the 70s, so I have no clue what it was like back then, or can't remember, being a fearful consumer. I was just trying to get enough dimes to buy a freaking ice cream cone from the ice cream man as he came around the neighborhood, and see if I can find some spare change in the couch. But that's what needs to happen, and we haven't. And again, because we haven't gone through it, we've gone through recessions since then, and so that's why everyone's mindset is so focused on how do we pull out of a recession, or how do we avoid going into recession. And I think that's the problem, is that everyone's just naturally programmed to focus on the recession part of it, because most of the people on TV as well were probably my age or younger, or maybe just slightly older, back when we had this bad of an inflation problem back in the 70s. So, but if you've had any sort of economics class or training, you know that inflation is bad, and it's hard to combat, and there's usually not a painless way to combat it, because it's just not human nature to just naturally stop the spending pattern. So anyway, I know many are tired of me saying it, but I do have new people that jump on, so I have to kind of review that from time to time. Now, we're still seeing a real big split in the indicators. I'm going to focus on these right here, and then we'll look at the individual ones. You can see again that sentiment, which is the blue line, is very extreme. You can see that market momentum is pulled back a little bit, but it's still relatively high. But really what's glaring is the breadth. The market breadth is all the way down here. That means that there's few stocks participating in any rally the market's had. It's been very few stocks that are participating. And we have been talking about Apple and Microsoft and Amazon and some of the big cap tech stocks leading the way, but some of those are starting to roll over a little bit, and that's another area to be concerned about. I mentioned this a week or so ago, where I said, hey, if you want to see when this current market rally could start to break down, is because it's been very, very narrow. Look to see where those big stocks, NVIDIA is another one, look to see when they start to roll over, because that could be when things start to decline. But that shouldn't be the case in a healthy uptrend. You should see a lot of participation, and we're just not seeing that. You can see that on the individual indicators here. Here's momentum. Momentum was that red line that's on that chart. We were in the extreme range, but we backed off. We're not extreme. We're not overbought as far as momentum is concerned. And so there's still room for the market to move a little bit higher. And this gets back to, okay, I've had people ask me, what do you think the market's going to do? Well, first of all, how do you think the market's going to react to the jobs report? Now it's, how do you think the market's going to react to the CPI report? And the answer is there's room for it to rally a little bit further, I just don't see it rallying very far, though. And this gets back to the VIX argument as well. We'll look at the resistance zone again. Look at the charts. So as far as knowing exactly where the market's going in the next week, can't know that with any certainty. But again, I'm going to show you how it's eventually more likely to move lower. At least right now, that could change too. And if it does, we'll flip flop. But this is showing that we've come off. We were extreme as far as momentum. We've come off that a little bit. So there is room for the market to rally and that momentum to kick back up into that extreme range. But again, it probably wouldn't take much of a rally to push it to the far right side of this extreme range. And now you're as far as a probability area, you're a higher probability of pulling back in that area. And that's what happened last time we got into this extreme range. What happened? The market didn't pull back very far. A couple days or so, it pulled back though, and that's why we have these indicators to warn us when those pullbacks are imminent, when they're very close, or rallies when we get to the far left side over here when we get extremely oversold. And again, a lot of times we don't worry too much about where we're at in the middle here. As far as this indicator, this is more designed to tell us when we're hitting extremes. We're getting stretched one way or the other, overbought or oversold. But there are divergences that we can see in this, and that's what was glaring up here, was that you can see that market breadth was really lagging those other indicators. There's not a lot of participation in the current attempt of the market to rally. Here's market breadth. You can see it's right in the middle there. Again, could go either way, but the fact that it's lagging so much is what's been concerned. And then sentiment. This has been elevated for a long time, but this is really bothering me because we're getting some really shocking events that should be spooking the market, and they're not. And at some point in time, it's likely to, but because the opposite's not happening. The market isn't just blindly buying with some of the scary news, but it's not selling on it either. And it's almost like it doesn't believe it, or it's waiting for something, or waiting or hoping it doesn't happen. Some of this bad stuff doesn't happen, and it can just close its eyes and wait it out, so to speak. At some point, the market's going to have to trade what's going on, and I don't know what's going to trigger it. Whether it's waiting to see earnings start to get revised downward. Well, we're going into earnings season right now. By the way, that's another thing the market will focus on is CPI on Wednesday, and then we start getting bank earnings and kick off earnings season later in the week on, I think it's Friday, and then into next week. And so the focus is going to be on all these earnings reports coming in. What's going to be enough to cause the market to react? But the sentiment is, there's too much complacency. There's just not enough worry with what's going on. I mean, you had OPEC with the major cuts that they announced. Market didn't react to it. Here we are with the CPI report that comes out tomorrow, and the VIX is down about as low as it gets. We'll look at the VIX here in just a second. Doesn't make any sense. At least there would be concern of the unknown. Well, we don't know what that report's going to tell us. Inflation could still be hot. There's just no. Usually, you'll see that VIX, if anything, just spike up a little bit, just to show that some people are putting on some protection ahead of a major event, and we're not seeing that a lot with some of these reports that quote unquote everyone's focused on. We're not seeing that we're seeing just too strong a complacency, and it usually ends badly. I'm just saying when that happens. All right. Question: when analyzing a stock, how much weight do you put on analyst price projections? Absolutely nothing. I don't have any. I do not if someone says an analyst said this, it goes in one ear and out the other even faster than it went in the first year. These people are clueless. I don't know why they exist. There's so much conflict of interest in that whole process. It's unbelievable. I've had analysts that traders have needed a stock to be upgraded because they've got a bunch of shares they need to sell. They need someone to buy them. And the analyst owes them a favor because they gave them inside information on a stock so they could make their analyst projection and be right on their analyst projection before. So this person now needs a favor to get buyers, so they upgrade the stock. So buyers come in and immediately that guy sells it, and suddenly that stock tanks right afterwards. Not to mention, almost every analyst tends to upgrade the stock when it's at the very top of the trend, and finally downgrade it when it's at the bottom of the trend. They're never right as far as where it is in the trend, and so it's useless. Just learn how to read a chart, and that'll be what saves you. If you're going to listen to analysts, man, you're going to get destroyed. Now, do analysts sometimes move the market? Yeah, if they upgrade a stock, it could sometimes move higher, but just keep that in mind. It could be just a false move or a last-ditch effort for that stock to rally, and then it rolls over again. And not to mention, you don't know when that event, when that upgrade or downgrade is coming. So how can you prepare for it ahead of time? Now, sometimes it does hurt a trade, especially my shorter term trades, like option trades, where I've got a put option trade on a stock. The chart is showing it should go down. Suddenly some analyst upgrades it or comes out with some price projection that's higher. The stock jumps up for a day or two, but it's long enough and far enough where my option trade expires. But it doesn't happen all that often, and it's one of those things where it's just bad luck. It happens, and you're like, oh, well, I got stung on that one. But there are also times where it works in your favor in an option trade where, you see a bullish pattern and you're in it, you're expecting it to go higher, and then some analyst upgrades the stock and it jumps. So, what you were expecting to make over 3 or 4 days, you made in one day because that happened. So those things tend to even out. But as far as listening to them, no. I would strongly recommend you don't, at least if you're going to approach this from a technical standpoint, which I'm assuming if you're in this course, you're going to be focused on the charts. You're going to get rid of all the noise of people on CNBC and Fox Business Channel and, whatever websites you're following. Just read price action, read the charts, learn how to do that. You'll cut through all the other crap that's out there and save you a lot of time and really a lot of confusion from all the differing opinions out there. Sorry, I didn't mean to get animated on that, but yeah, I don't have a very high opinion of the analysts out there. All right, so let's also you can look at buy sell ratios, not extreme, so we could move either way based off of this. We're not stretched here. This would be stretched. This would be stretched. We have room to go either way, up or down. The market has room to go either way, up or down on that. This sentiment indicator, though, is still up near overbought. So, like I said, the market could react this week positively and rally, but you're going to rally right into this area. And almost every time it hits this extreme, the market pulls back. And usually it's a bigger pullback where it starts to move down to the lower end of the range. And so this is showing to us that we're probably getting pretty close to a bigger pullback as well. And more importantly, it's just telling us, even if the market rallies, how far is it going to rally? And that leads us into our charts. I talked about, let's go to a 1-year chart here real quick. I've been talking about this kind of resistance zone. We're right at this area of resistance right now. But there's this area just up above it right here, and so we kind of have this zone right here. Now it could be that it's bumping up against this. Remember, that report comes out tomorrow. Could be it drops right off of that if it is going to drop. But if it does react more positively, you could see it push up, and I would focus on this area up here. I don't think it's going to break out above that. And if it does, it'd probably be very quick false breakout. And maybe that's what it takes. Is it looks like it's breaking out of here. Everyone thinks it's going to, because everyone can see this. Everyone's watching this. Anyone that knows how to read a chart is watching this. Could it be the market punches through that and then immediately reverses? I don't know how it'll play out exactly, or if it'll play out that way. Maybe the market turns more bullish here, and I've been wrong about everything, and it goes higher. If that's the case, I'll turn bullish with it. I'm not trying to win the Nostradamus Prize of the Year or anything. So I'm just trying to make money. But that would be, based on my experience and based on what I'm seeing here, that would be what I would be focused on, is this resistance zone. Now, one thing I kind of started looking at is I was reminded, there was a comment made that I was reminded that April tends to be a pretty bullish month. Okay. And there are a few months that tend to be more bullish or bearish than others. We tend to look at May as being more of a bearish month. Sell in May and go away is the phrase. August and September tend to be very bearish months overall. Now, first of all, never, ever, ever base a trade off of seasonality alone. You'll get destroyed. Nothing ever, because if every month, if every April is always bullish, then that's all we would do, is just trade the bullish months and take off the bearish months, and we'd never be wrong. But it is good to kind of understand seasonality a little bit as it lines up with what you're seeing on the charts. If you're seeing a very bearish chart, then sometimes what can happen when you're entering into a bullish time period is that instead of dropping right away, it could move sideways for a little bit, or it could be a little bit more sluggish until it gets out of that more bullish seasonality. Or sometimes it just goes against the seasonality. December is what I'm kind of focused on right now, is because December tends to be more of a bullish month. You always hear about the Santa Claus rally or what have you. Well, this is what happened last December. Again, we had been moving up ahead of that pretty decent. And this was the CPI report that came out in December. The market gapped up. Not only did it gap up, but gapped up above that previous resistance area right here, and immediately started to drop. And by the way, that was December 13th. We're at April 11th right now, and a CPI report's coming out tomorrow on April the 12th. Could we see something where the CPI report gaps up? We're watching this high right here, gaps up above that. Looks like it's breaking out and then reverses. By the way, if that happens, and I'm going to be buying getting very aggressive with some put options, because that's what happened last time, is this thing just dropped for the next few days sharply and had that decline. So now, I don't know if it doesn't always play out the same way with all these reports and everything. I just thought it was interesting that it's lining up very similar. You have December's probably the most bullish month of the year typically, and yet we had a big sharp decline that we normally don't see that sharp a decline in December. Could it be history is repeating itself right here? We're definitely getting things setting up for a move lower. Could this be the trigger? It may not, and it may not be the CPI. Maybe it's those first bank earnings that come out that cause this. But I just thought that was interesting that that's what happened. Now, then what happened is, for the rest of the month, we started to move more sideways. So again, we got a decline, which is unusual. Instead of going much lower, though, it kind of held. It just kind of went sideways. And and then it started to work its way back up again. So this is the thing. I thought for sure back in December we were going to get that sell-off out of that corrective move. Didn't get that, but at least I'm looking at least ahead here that maybe something similar happens where we get a sharp sell-off, maybe only down to this low or close to this low. I'm not in the camp yet of panic sell-off just yet, just because, and maybe that's why it's going to happen, is because we keep thinking, is this the one? Is this the one? Is this the one? At some point you start to, it's at the point where you stop believing it's going to happen, or you don't think it's going to happen this time, and then that's when it happens. So, it's because I don't think it'll be that big right now is probably the reason why it will. It will be really ugly or something like that. Who knows? And this is where you can drive yourself nuts with analysis. It's if you guys are Ted Lasso fans on Apple TV, this last episode they were talking about the previous coach left for another team, and they were using his game plan that had a successful season with it. Now they're facing off against him, and they're having this argument to, well, we can't run this because he knows we're going to run this, so we got to do this. But he knows that we know that he knows that he's going to do this, so we're going to do this. And you get into that argument of back and forth where it's like you're trying to outsmart yourself, and you end up outsmarting nobody. But because the funny thing was, it came all the way back to the original strategy again, because he'd never expect us to do what he invented and what he was implementing at the time. So, sometimes with making these arguments, I start to laugh because I find myself doing that same thing. Well, this is the time where we're going to drop because I'm not expecting us to drop. But because I'm not expecting us to drop, this is probably the time I need to, I know we could have that argument all day long, but the bottom line is that we can analyze, we can look at probabilities, we can't control outcomes. But the point of doing a lot of this analysis is to, like I've mentioned many times before, do just that. We're game planning. We're looking at, okay, if this happens, we look for this, and what if this happens? Are we prepared to trade whatever happens? If we break out of this range and take off, and all this bearish talk, doesn't hold water anymore, then we're going to have what are we going to do about that? How are we going to deal with that? Now, I'll deal with that when we start showing signs of breaking out. Until then, with it where we're at, again, like I said, with the VIX, with the sentiment, with breadth, where we're at, we're very little upside potential, a lot of downside potential in this area. All right, now with the Dow had moved real sideways since last week. And I think I mentioned on Thursday that, when this is showing it should have another move higher out of that, typically do, but it did today. That could be it, breaking out of that sideways range. This gets back to whenever you see a stock moving sideways, you want to pay attention to the direction it was moving in before it moved sideways. That's where it's more likely to go after it's done moving sideways. Well, basically it fulfilled that today. It did break out higher. It was moving up ahead of that real sideways movement there. And this also gets back to, you look at those candle ranges, are you stuck on inside days? If you are, then it's real simple. If you break out above an inside range, that tends to be more bullish, and break down below, it tends to be more bearish. The question here is, okay, do we go up another few days or so? There is some resistance up into here that so we had that resistance on the S&P up a little bit higher. This is where that resistance is on the Dow, up a little bit higher here. There's a lot of strong resistance up in this area here. And again, it could break through that, and if it does, that'd be a very bullish sign. If it doesn't, we'll change our tune a little bit. NASDAQ 100, we were talking last Thursday about how we had broken out above this breakout area, and then we kind of come back and we're testing it a little bit right here. if we might, and this could rally and maybe go even higher than that. Let me back out a little bit, see if there's any other resistance up above that. No, not really. No, because you've got, this lines up pretty much with that as well. I mean, obviously up here, that'd be a pretty big move, and it's possible maybe the NASDAQ outperforms the other indexes, has a much bigger move if the market turns near-term bullish right here. But definitely keep an eye on the bearish side. Keep an eye on this breakout. Do we break down back below that breakout area? We come back down below here, that would definitely be more bearish. And remember, the chip stocks, we'll look at those here in a second, but they already broke back below that breakout, and they tend to be the leadership group within the NASDAQ 100, the chip stocks. Russell 2000, it's outperformed the last couple of days, but I think a lot of that is just some of these bank stocks that are kind of correcting. They've been really oversold, beaten up. They're trying to rally a little bit. Also, some of the oil stocks have been up. And again, those two groups are the biggest part of the small caps. But again, this looks corrective. This looks impulsive. Could we rally up a little bit higher? Yeah, but then this looks like it's setting up for a bigger move down. Keep remembering about the what I said about those regional banks. We haven't seen them in the headlines recently. It's been kind of the market's moved on, but typically that stuff comes back around weeks or months later, and it's going to be a problem again for the market to deal with. At least there's a strong probability it's that problem's not over. Just keep reminding yourself of that. I don't know when it'll come back around, but just don't believe that it's been resolved and it's gone. I mean, if anything, how quickly it fell apart should worry you, and should always worry you, how delicate our economic system is. I mean, we could have a whole discussion on the dollar, the value of that piece of paper. Is basically, it is what we say it is until it isn't, and who knows when it isn't. And when it isn't, it's not going to be gradual. It'll be sudden, and suddenly that dollar has very little value, or a lot less value than it had before. So, but we live under this. We've lived under this for years and decades and all that kind of stuff. So, to say the dollar value is going to collapse overnight right now would be, well, there'll be a lot bigger problems to be talking about, worried about at that point. Chaos in the streets and mobs of people everywhere that you'd have to deal with, and there'd be a lot worse things to be. We wouldn't be focused on what stocks are going to invest in, because it wouldn't matter at that point. Or am I getting a buy signal with a 98 strength rank? All right, so bonds. Now I was expecting bonds to break out on this move, because you typically, we'd already touched it once, twice. Actually, you could make an argument that was close there and here, and I thought we'd punch through here. We've actually pulled back a little bit, so we are going to watch this area here and this area here. Obviously, if we get back up into this area here, if we come back up, we'll probably break out. But if we come back to this low and break below that low, I think we'll work our way back down to these lows down here. And so we're kind of in a no man's land right now as far as bond direction. Overall, you'd say the trend is sideways, and we're in the middle of that sideways kind of movement there. So no clear direction on bonds. And again, this could be part of the problem that, the market is looking to the bond market to give direction, and it can't figure out where it wants to go, and so that could be part of the could be a contributing problem to the market moving real choppy and sideways as well. Gold has pulled back a little bit. I got into gold, that gold trade on the breakout. It pulled back. That's not uncommon. This is a reason why I don't like to usually chase really big up days, is there's a tendency to either move sideways or retrace those days a little bit. Now my stop was down below here, so I've got plenty of room, and I might add another gold related stock. I just am really bullish on gold right now, and I think I'm not going to take any huge risk though, because but I want to do something to where, you know, those of you that are been dying to make a trade or looking to make a trade, you know, this is an area that, especially if you're willing to you know, withstand a few of these, you know, pullbacks that can happen. I think there's a lot of upside and a lot of reasons to be bullish on gold, especially with a lot of the uncertainty with banks and things like that. I think that adds to, and what we're seeing too is there's a lot of banks now that, you know, that were holding a lot of bonds that are transitioning a little bit into gold. They're buying gold, and that's adding to some of the bullish trend there. But I'm still pretty bullish on gold. Still could be room, you know, it could be that this is wave A, wave B, wave C. I just wouldn't expect it to go back below that breakout area, which is why my stop's down below here. And if it does come back down here and start moving back up, that's an even better entry point. And if you already had gold, you could add more gold if it pulled back to that breakout area and started to move back up. That'd be a good place to add. I like that chart. Oil, again, this is when the OPEC thing came out. And remember what I told you? I said, be careful chasing that move. Whenever you get a big move like that, especially in a commodity, there tends to be either move sideways to consolidate it or pull back, especially with option trades. The worst thing would have been to buy options on that day, because we've just been flat since then. Up a little bit today, but and it still could come back down and fill in that gap. There's a lot of resistance up here that it would have to clear above. Now, if it can do that, you know, I'd turn a little bit more bullish on oil. But probably the headwind here could be, and this could have been one of the reasons for the production cut of OPEC, is, you know, recession fear. If there is recession, oil prices, there's going to be pressure on oil prices. Having those production cuts could keep that pullback in oil from being dramatic, because they're lowering supply. So it could be they're just doing that ahead of the expectation that there could be recessionary problems throughout the world. Yeah, we'll see if it has some. This would be the area to see if it could break out above. If it can break out above there, that'd be more bullish for oil. But if it does start to pull back, at the very least, look for it to fill in the gap and down to this area. And there's a little bit of support in that, where that gap is as well, right into here. Here's your range. Just gotta keep an eye on. The dollar tried to rally a little bit for a couple of days right here. It's back down a little bit today. Overall, it's been trending lower. You know, you've had a few of these where it jumps up and then kind of works its way back down. I'm trying to see here, is this another one of those where it just kind of jumped up a little bit and then ends up going to a lower low. So what you can do is probably draw a line across yesterday's high and then this recent low. If it breaks back above there, it might be, maybe you are starting to trend up in the dollar. You know, at some point this could end up being a higher low, and then maybe it starts working its way up there to a higher high. I don't see that yet, but if it gets back above this high right here, well, there's two things you would look at that point. If it gets back above this high right here, especially if it does it without going any lower. It could mean that maybe it's put in a higher low right here, but you'd also have to look at the possibility that you're getting a bearish ABC pattern and then it declines further. We don't get a lot of real clear ABC patterns in the dollar, though. As you can see, not a lot of real, you don't see a lot of textbook ABC patterns on the way up or textbook bearish ABC patterns on the way down. You just see a lot of, here it rallied and just dropped, here it tried to rally and just dropped. So if I would think that if we broke above this high after having this drop today, that maybe that's showing more of a maybe possible trend reversal back into an uptrend, maybe a little bit of a stronger probability of that taking place. Now that could be a headwind if it does that. If it does move higher, it could be a headwind for commodity trades. But it's not, commodities don't trade just on the dollar relationship alone. Gold can still go up if the dollar goes up. Oil can still go up if the dollar goes up, and can still go down if the dollar goes down. But it is a factor. It is a relationship that you do want to pay attention to, because obviously a falling dollar will be more likely that gold will go higher and oil will go higher. So if you have trades related to that, you want to try to stay on the right side of that correlation as much as possible. All right, the VIX, let me flip over. I like this VIX chart here on my other charting service. This is what I keep coming back down to. Here we've got a CPI report coming out tomorrow, and the VIX is down almost below 1850. And every time we've gotten down these levels, we've had some of these. That was the bigger sell-off that just recently happened. This is the bank sell-off right here. But every time we get down these levels, we will have these little sell-offs that take place. And could it go lower? Yes, but the argument I keep making is that it only usually goes lower than that in bull market conditions. We're not in a bull market condition. So there's a disconnect there that just is bothering me, that the market just is not getting worried. Basically what it's saying is the market isn't getting worried about things it should be getting worried about. And you could say, well, maybe it's not worrying about it because it's not a problem, and we're going to find out it's not a problem. You know what? That's a possibility. But I'm just going off of experience. When the market gets like this, it's usually the opposite. That it's ignoring until it gets shocked. And what this is saying is that those professional traders, we haven't had a massive sell-off since, or big, not even a massive. We haven't had a big sell-off since October. These professional traders just are not wanting to buy protection. They don't want to buy those protected puts, that insurance for a big drop, because they haven't needed to have it, and they're hoping they don't need to have it, because time and time again we have these little sell-offs, and again we have this bank crisis, and so they started to buy those puts because of the bank crisis. And what happened? They didn't need them. And that was a big event. That could have been catastrophic. And so each time that happens, again, this is human nature. Each time that happens, when you have to spend the money, and this is why we look at the VIX, because this is actually them having to spend money, and the VIX is showing you how aggressively they're spending that money to buy protection. Right now, they're not. That's why it's so low. And so they're buying it, they didn't need it. They're buying it, they didn't need it. They're buying it, they didn't need it. So they're trying to find less and less reasons to buy it. And right now, here we have the CPI report, and earnings started kicking off this week, and they're not buying any protection. This is an environment where you get panic sell-offs. The only boy, the biggest indicator though is that I would say that a big drop is imminent would be if they are not buying protected puts, and it's because they're overly bullish. You see this happen at market tops sometimes, where they're like they don't think the bull market's ever going to end. But obviously, we're not in that stage, so I'm not going to expect that type of confidence from them in this scenario. But to see it down this low in a bear market condition, and it's not like we've had these huge rallies that is making the market look a lot more bullish. Yeah, that scares me. That continues to scare me. It's something we'll continue to watch. And I would assume, because we've been low for now a week and a half, that I would say that a drop is a market drop is getting pretty close within a few days, I would say. But there again, a few days, could it this week, or I'd say either this week, either later this week or early next week would be my guess, based off of what I'm saying. Now, how big? It could just be, just a small little pullback, or not small. It's not suggesting a small pullback though. So, but it could be something just real quick where it drops for a few days and then recovers again. I'm not calling for the big mother sell-off here, but that's something we'll continue to watch. And we have. I mean, we thought back in here, are we setting up for something bigger? But it is pretty unusual to have it, down here under 20 now for 2 weeks, almost 2 weeks there. All right, real quickly, let's go over the SMH. So the SMH, the chip stocks, remember we were talking about in relation to the NASDAQ 100. We broke out, then we broke back below. It looks like we're trying to break back above right here, although it's got a little bit of it looks like it could close lower than where it opened, a little bit of a bearish, although this is probably a little bit more of an indecision candle, the way it's compact like that. But it also, kind of getting kind of this, maybe a bearish head and shoulders pattern. I talked about how we broke that trend line right there, kind of broke below it. Now we're kind of retesting the underside of that. It just is looking, it's subtle right now, and that can change. When it's real subtle, it's still early and it can change, but it kind of has that feel of rolling over, possibly rolling over. And a big part of that was that break of this trend line. It broke that trend line right there. Now it's kind of back underneath it. Let me look at, I told you to look at some of these leadership stocks. Yeah, look at NVIDIA. So it was moving up sharply right through here, and then kind of broke down. Looks kind of sluggish, kind of moving up here. Microsoft. Had this big push higher right there, and now it's moved below that low today. If you were to draw a trend line up through there. Again, this is real subtle right now. It's not saying, wow, this thing is really coming down. Had a bearish inside day yesterday on that. Same thing happened on Google. Let me look at Google. I thought about trading that with a put option trade, but I knew that today would be probably pretty uneventful with ahead of the CPI report. But that had a bearish inside day yesterday after that big move on last Thursday. But that looks like it's kind of rolling over a little bit. Apple. Remember, these were where everyone was getting into. This is what everyone was getting into. Not the Apple, aside from today's price action, that's kind of weak, but that's that's still in line with that trend line there. So, but if it breaks that trend line, it comes down lower than that, it would be a sign that could be rolling over. But it doesn't look as weak as the other. Apple doesn't look as weak as the other ones we just looked at. All right, transports. Transports, you can really kind of see. I mean, boy, you can see the higher high, higher low, and then suddenly you're getting lower high, lower low, lower high, lower low. Or this would be kind of that lower low right there. Now, could it be that this is a higher low and we get a higher high? You could watch for that, but we talked about this kind of bearish head and shoulders pattern. Here's your neckline. You kind of ran up to the neckline today. Last time it did that, it rolled over. See what happens off of that. What the CPI report comes out tomorrow. Do we see the Dow break out above here, or Dow transports? These are the Dow transports. We could watch for that, but you can kind of see that gradual, it's kind of moving up, and then it starts to roll over, move down. Bitcoin had a little burst of a move, and not too shocking, when it started moving sideways, then we see a stock moving sideways. Although the last couple updates, I thought there's still a possibility it can move down into the lower end of that sideways range, so you had to worry about that. But ultimately, not surprising it broke out higher. Now, you had a breakout. You had a candle today where it got all the way up here and then faded all the way off the highs there. That's a bearish price action, okay? Doesn't mean that it has to pull back or come down from that, but usually it tells you that sellers close it all the way down like that. That's usually an early signal of a possible pullback, and it could just be a quick pullback, but usually that's more of a bearish type of a close. And we got an hour left before the close, so that could change, but we'll see how that looks at the end of the day. All right, so that's what we'll be looking at for the next couple of days. See what happens, and who knows? We might get a strong enough bullish move over the next 2 days that Thursday's class I sound completely different. That's fine. I'm not too worried about that. As far as the portfolio, let me go over a couple of possible stocks. I'm just going to go the muscle stocks. We'll try to, and if we don't sell off strong by Thursday, I'm going to try to see if we can add a few things. I'm not, I think that especially if we keep our stops fairly tight, I think we could, we're not, and I'm not going to get very aggressive, but we'll see if we can kind of, I want to try to start, see if we can build this up a little bit. We've been kind of stuck in this range on the portfolio. I want to start to see if we can move it a little bit, hopefully upward and not too much downward. But I like this top one here, ASUR. Although you have to take into account that with that breakout move, it did break out yesterday. And with the breakout move, it did push it into that extreme reversal risk. So it is at the far right side. Means it's probably what could probably happen here is it probably could come back down and retest the breakout. Although I thought this is a pretty long consolidation. But and see the problem too, where it's at right now is that with that sideways range, you can take the top of the range to the bottom of the range and project that upward. That gives you an initial target, a minimum target right here. So that could be, we're already overbought. Maybe we run up into this area and then come back and retest the breakout. So this might be one where you see if it can come back and retest the breakout. But that's a pretty bullish looking pattern there. So And if you're not worried about the near-term overbought, on these breakouts, you could just put your stop at the bottom of the range right here. Because if this thing came back down and all the way back down and stopped you out, you're probably wrong. It's not going higher, obviously, at that point. That was probably a false breakout. On the other hand, if it takes off, then you could move your stop up right underneath that breakout area. So there's still ways you could deal with that just with trade management. My problem is I just don't, I do that a lot in bull markets where it's like I don't care so much about timing the longer, if I'm in a longer term trade, about timing the move perfectly. I'll make up for it with just how I manage the trade, where I put my stop and then let it have its back and forth. I'm not going to worry about the back and forth. Let it kind of do its thing as it tries to move higher. But bear markets, it's, they just suck. We can't wait for it to be over with. But that's why I want to get this panic sell-off over with. I want to get the inflation under control so that we don't drag this out for 2 more years. We already had a sucky year. Let's not drag it out longer than it needs to be. Get it over. Get the pain over with. INTT, this one's not bad either. You can see the kind of an ABC pullback right here. And it's just kind of right at the breakout. And this one isn't at the extreme reversal risk area either. So it might mean this could break out and run a little bit. Put a stop down below this low here. And then one more. This YPF. I think this is an oil stock. Is that right? Yeah. Now this could consolidate a little bit right in through here because it dropped sharply and came right back up. It consolidated a lot in this area right here. We're right back at those highs again. Now, if it broke out above those highs, that'd be pretty bullish if it does so right here. Or it could break out, come back and retest it. Maybe it retest it again. But that was one more kind of keep an eye on it, watch it a little bit, see if it can break out. It would be ideal if it did move a little bit sideways. Had a pretty good run right up in here, but if it does move a little bit sideways and then breaks out, I love those type of breakouts when they consolidate right at the breakout area first and then break out. They can usually run pretty good when they do that. So that's one to kind of maybe keep an eye on. All right. I did mention, now the 2 things I was looking to add was either Newmont. This is a gold stock I had. I got into this one a while back and then got stopped out of it. The idea here was to, we pull back, have a little bit of a bullish reversal candle today, although we're off the highs today a little bit. The idea here was to put a stop kind of below, like around 47, below this area here. But I think I might do Report Macmillan, SCX. SCX is it's kind of it's like all these mining companies. You say, oh, it's a gold mining company. No, they're not. They're a mining company. Do you think that they find silver, they're going to be like, oh, we're not a silver company, we're a gold mining company, so we're going to put the silver here? Or if they find copper, they're like, oh, nope, I'm a gold miner. I'm not going to take the copper. No, obviously they're focused on certain areas where the majority of what they're pulling out of the ground is gold. But they're pulling everything out of the ground with these miners. And so FCX sometimes is viewed as a more of a copper type of play, but they're also they tend to move pretty well with gold as well. And so I'm looking at the possibility this is a little bit of a larger ABC pullback right here. Let me take a look at the longer term chart here real quick. Yeah, I like that. that pullback. And I'm just going to manage it all. I want to get my stop. The initial reaction would be to get the stop right here, a nice move up today. And here's the pullback, had a low right here. But I'm going to push it down a little bit lower. You have all this congestion right through here. It hugged that area right in here. It hugged it right in here. And so I believe that if it goes below that area, I'd be wrong. So that's at about 37. So I'm going to use 37 as a stop. And again, may not work, but I'm not going to lose very much if it doesn't. We can see just what it would be here. On. I'm going to put it in the stock specific class portfolio. My stop price is at 37. 100 shares before, so I can do 200 shares. I try to keep the amount in each trade between about 7 to 10,000. So we're right around 8,000. That's not what I'm looking to lose if I'm wrong. That's if I got stopped out, I would lose about $900 or a little over 0.5% of the total portfolio. And usually I want to keep that portfolio risk under 1.5%, and we're well below that. But yes, you have to be okay with this dollar amount too. If that's still too high, you're like, no, maybe I could handle a $200 loss. Okay, then you're buying fewer shares. You have less money going into the trade, and you're focused on the risk. You're focused on making sure that amount is whatever the amount you can handle. Okay? That's not going to hurt us in the portfolio if it gets stopped out. So I'm going to go ahead and purchase. And you can see we're still mostly in cash. By the way, that SGML is still kind of working for us. It pulled back again here recently, but looks like it's moving up again. All right, that's all I have. Have a great week. We'll see what happens tomorrow morning, and then we'll see what we talk about on Thursday. But have a great week, everyone. We'll see you on Thursday for the stock specific class. Bye now.